Let me just show you guys Shopify. Yeah, Shopify is one of the few companies out there that has a grade A income statement and balance sheet. Usually if you see that sort of move, you'd be thinking, okay, volume's got to be intense. Volume's got to be insane today. It was just crazy seeing some of those valuations back in that time period when the market was just going down. And, every time you get one of those opportunities, you just got to take advantage. That's who always ends up winning, is whoever's takes advantage. Howdy, folks. Hello, chat. Hello. Hope everybody's doing phenomenal out there, as always. Anyways, we got a lot to get into here today, folks. A lot to get into. So let me start pulling stuff up here, and we'll discuss a lot. Obviously, we had more earnings. We've got to discuss. There's a lot of interesting moves out there in the market here today that I'm kind of looking at. So we'll speak about that. I don't believe there's any news in regards to Honest. So I don't know what's going on, but that stock is moving. I mean, it's up, like 60% just this month, roughly. So I don't know what's going on there. That's a huge move. Just like I said, I don't believe there's any news in regards to Honest today. So why it's up 16%, I have no clue. But it's just making some pretty big, strange, huge upward moves here recently. So I don't know if something's going on behind the scenes or whatever's going on there, but it is of interest. Let's just call it that. Elephant and Shelf up 2% here today. Amazon up about 2%. Cake up. Mattel up. PayPal up. Shopify up. Texas Roadhouse up. Meta up. Skyworks. Should be a good day in the public count. That's the moral of this story. Win up. Qualcomm up. JP Morgan up. Avant up. Revolve and PFE. Down today. Target. Palantir is very slightly down. 0.4%. Foot Locker down. Fubo down about 2 percentage points here today. Tesla down about 3.5%, and Nordstrom down 5% after their earnings. By the way, I haven't graded Nordstrom's income statement yet. I should do that. I should go grab my iPad and grade their income statement live on here, and then show you guys what's going on there. But I just want to take a look around before we get into that. So, safety stocks here today were more green than red. I call it that. Possible buys, Guess is down 11 percentage points here today. Zoom's down about 3%. Zoom I'm actually looking at as a potential. Zoom's actually one of the few companies in the world that has a grade A income statement and grade A balance sheet. If you look at their latest quarterly results for their income statement balance sheet, you will not find many companies in the entire world that have a grade A on both. Zoom actually has it. And so I'm actually looking at Zoom and I'm like, is this stock a hidden gem? But I'm just doing a little more work on their business model behind the scenes and kind of trying to figure out as much as I can figure out there. But I'm actually seriously considering Zoom for the first time in my life. That was just a stock that never interested me. Obviously, if you guys remember back in the, we can call it our miniature tech bubble we had in 2020, 2021. I mean, look at this stock. It went all the way up to $560 a share back at that time when it comes to Zoom. And then it crashed. And it's kind of been in this bottoming out phase for the last year or so. And so, I don't know, man. It's a stock. I mean, you can't just, like I said, there's so few companies in the entire stock market that have a grade A income statement and balance sheet. So few. And so when you have one of those very few, I mean, there's probably 10 or 20 stocks in the entire stock market that you truly could say this is a grade A income statement, grade A balance sheet. And so when you come across it, you got to at least consider it, especially if it's a pretty low valuation, which is where Zoom's at right now. Forward P is very low on that stock. So I don't know. I'm going to consider, maybe something there. NVIDIA is certainly one of those stocks that fits that category of grade A income statement and balance sheet. I mean, their numbers were incredible yesterday, but stock faltering a little bit here today. HIMS is up pretty big today, about a 6 or 7% move there in regards to that one. Let's see stocks I'm hedged against. Obviously more green out there, so the hedges aren't going to do very well on a day like today. AI stocks, Tesla, NVIDIA, Palantir, red. AMD's the best stock of the bunch. Isn't that funny? NVIDIA comes out with these great results, and then NVIDIA goes down, and then AMD goes up. That is kind of hilarious. Trade Desk up over 2% there. Amazon's up about 2% here today, so good day there. Microsoft, oh my gosh, such a confusing situation. So now I hear Sam Altman's supposedly supposed to be the CEO back over at OpenAI now. What a mess, man. I mean, I've never seen anything like that. It is a weird, messed up situation. Banking watch list, Deutsche Bank's worst stock here today, down about 0.9%. SoFi best stock here today, up about 3%. KRE's up as well, which is Regional Banking Index. Let's check out big tech here today. So in terms of big tech, obviously Tesla and Nvidia are the big L's. CRM, Palo Alto Networks, slightly red. AMD's best stock at big tech here today. Amazon second best. And hey, PayPal's third best at big tech. What do you know? Hey, there you go, PayPal. Getting your stuff together, huh? Problem is, PayPal still has to deal with, some tax loss harvesting over this next month or so, going into year end. So that just kind of puts a little bit of a lid on PayPal stock in the short term. Really talking about the next 4 to 5 weeks. Because obviously the stock's gone down so much the last couple of years, there's definitely going to be some, people that take some tax loss harvesting. So they're probably already doing it, but, we'll continue on here. Have up the first guy here. And go ahead and send that through. Nordstrom, and then I'm going to do John Deere after that. John Deere stock's down here today. So, this is Nordstrom I'm about to put up here. You guys can take a peek at this one while gave them a C+ on their earnings. Obviously, the revenue is a real weak part for them. Cost of sales getting in a much better place. Selling general administrative, much better place. Earnings before interest and income taxes in a much better place. And then obviously net earnings in a much better place for Nordstrom there. So good for you, Nordy. Next one up here is John Deere. I gotta post that in the private stock group too. I have a tab in the private stock group in the Discord chat. It's just income statements. And all I do is just grade income statements all the time. I've probably graded, 50 to 100 income statements easily this earnings season so far. All right. So, John Deere is a very mixed bag income statement here from Deere. So, when it comes to DE, so obviously the net sales down roughly $500 million year over year, maybe a little more than that. Financial and interest income was up quite a bit for the company, so that's good. Other income was roughly in line, down slightly. So total was down, not good. Cost of sales was down more than net sales was down, which is something good. That's something I want to see. Research and development was roughly in line, slightly up, right? SG&A was slightly up, but they kept that in check pretty good. Interest expense was up substantially for the company, obviously year over year. But overall, total operating expenses was down, a decent amount year over year. Income before income taxes was up, we can call it a little more than almost $300 million year over year. Net income was up about $122 million roughly year over year or so. And so EPS was green for the year in terms of better on a year-over-year basis. So decent, but it's very mixed bag. That's why I gave him a C. That's like very mixed bag. Kind of like if you take a test in school, that's a mixed bag right there. So Urban Outfitters getting hit hard today as well. Urban Outfitters down almost 13 percentage points. Autodesk getting hit hard today as well, 6.6%.
Yeah, and now I think that pause can only last so long. And so, like you said, there's a big variation. And one thing we've noticed on soft landing cases, if you're going for the soft landing, there have been 12 cycles that we count.
Volume's not even that high.
Landing, so you're already against the odds for a soft landing. The longest pause we've ever seen for a soft landing is 7 months. That was 2018. Same Fed, that was Powell back then. So that's the outer limits of a Fed pause. And so I think it's something to keep in mind. So if we go all the way to March and the 8-month average,
I don't get it.
Already beyond the limits of a soft landing. And one more data point I'll throw out for everyone to consider is we've seen a 0.5% rise in the unemployment rate. We haven't had job losses yet.
I don't get it in regards to honest. I really don't, because the stock's up 17 percentage points today. I'm looking and usually if you see that sort of move, you'd be thinking, okay, volume's got to be intense. Volume's got to be insane today. No. 891,000 shares of trading hands. Average volume is 1.08 million. It might not even get to average volume. Think about that for a moment. It might not even get to average volume, and the stock moved up 17%. Unless there's just really no damn sellers. And just like anybody that is selling wants, let's just call it much higher prices. That's rare. I'm just telling you guys, that is rare. You see a stock make that outsized of a move, and it's probably not even going to hit its average volume today. That's crazy. That is insanely, insanely rare. Wow. Okay, so I want to show you guys here Zoom. So like I said, they're one of the few stocks, literally the entire stock market, that has a grade A balance sheet and income statement. So their balance sheet's pretty shockingly great. Almost $1.5 billion in cash and cash equivalents. They have another $5 billion in marketable securities. They have, now that's versus other liabilities, non-current, of only $76 million. If we look at total current assets, almost $7.5 billion versus total current liabilities of $1.7 billion. If we look at total assets versus total liabilities, $9.3 billion in total assets versus $1.9 billion in total liabilities. I mean, that's just, that's a grade A balance sheet. Like, that's freaking amazing. Like, good for you. Good for you, Zoom. Damn. But then they back it up with a grade A income statement as well. So revenue growth, not the most exciting in the world, but it's revenue growth nonetheless, right? Cost of revenue kept that roughly in line. So the gross profit was up, we can call it $34 million roughly year over year, right? Good. Then if we go ahead and take a peek at research and development here, research and development for the company was, we can call it slightly up year over year. Sales and marketing was actually, they were able to pull that down substantially, which is impressive because if you can pull your sales and marketing down, let's call it $53 million or whatever that is year over year, but your revenue actually still grew. That's actually pretty impressive. I will say that. G&A was down about $16 million year over year for them. Total operating expenses down substantially. So their income from operations exploded higher. The income from operations, $169 million versus $66 million in the same quarter last year. Net income, $141 million versus $48 million same quarter last year. Now, does this mean Zoom's necessarily a great buy? No. There's two other big factors to come into play here. One is valuation, right? Well, what's a stock like Zoom trading at on a forward P basis? They're trading undervalued, overvalued, fairly valued, right? Obviously, if it doesn't have the most exciting revenue growth, it can't command a huge forward P. So if we look at it based upon what analysts have this company earning next year, they're trading at about 14 forward PE. So yeah, that's not very high. Considering they still have growth and they have much bigger growth, it seems like in the bottom line than the top line, that's actually impressive. Now, the other big factor to keep in mind is, do you believe in their business model? Do you believe they're going to continue to be able to attract customers, keep their current customers, and all those sorts of things, right? With obviously competing products out there that are probably inferior, I'll just be honest. Like, the products that do compete with Zoom seem to be inferior. But it's another factor, and that's kind of where I'm at with Zoom. Is I'm really trying to figure out the business model in terms of, do I think they can continue to grow? Do I think this revenue is going to be stagnant? Do I think it has a chance of going down in future years? If it does, how much would it go down? So those are all things I'm actively considering right now. But there's no debating the income statement, the balance sheet with Zoom. That's not up for debate. That's just about as good as it gets from just about any public company in the world. So good for them. But I'm trying to think how many companies have a grade A income statement and balance sheet. I can think of a few. NVIDIA would fit that criteria. Meta would fit that criteria. Amazon would fit that criteria. Apple, I don't know if I still put them into a grade A balance sheet because they took on so much debt over the years. I might put Apple more into the a B plus. So I don't even know if I'd put Apple there. And I couldn't put Apple there. Their revenues are going down right now. So they also don't have a grade A income statement. So Apple, that's crazy to think. Apple doesn't have a grade A income statement or balance sheet right now. Both would be in the B category, likely. Microsoft probably would fit that criteria of an A and an A. PayPal, I probably couldn't even put PayPal in that category. Their income statement's at grade A, but the balance sheet, I wouldn't actually call it a grade A balance sheet. It would probably be more in the B category, maybe B minus, something like that. Elf would probably fit that criteria of an A and an A. Monster might fit that criteria. I didn't see Monster's latest income statement. Oh, Google. Somebody says Google. Google McDougal. Probably. I'm trying to remember Google's latest quarterly numbers. Somebody said Texas Roadhouse. Texas Roadhouse, actually not. Texas Roadhouse's latest income statement was actually likely not grade A. I should have it in my Discord because I did grade Texas Roadhouse. I believe Texas Roadhouse had a B level income statement in its latest quarter because if I recall, their expenses went up at a faster clip than their revenues. But let me see here. But yeah, I don't even know. Texas Roadhouse, no doubt the balance sheet is there. I just came across Lucid. It graded Lucid a below F grade income statement for their latest quarter. Oh, by the way, Palantir got an A plus for their latest quarter. Cheesecake Factory got an A minus for their latest income statement, but Cheesecake Factory doesn't have a grade A balance sheet, so they wouldn't fit that criteria. Chipotle got a grade A for their latest income statement, but I don't know if Chipotle has a grade A balance sheet. I'd have to take a peek at their balance sheet. Yeah, Texas Roadhouse, I actually graded Texas Roadhouse C minus. C minus income statement for this latest quarter. Damn, Texas Roadhouse. Yeah, they had a for them this was a bad quarter. I'll just be honest with you. For them this was a bad quarter. I'll send that over here and explain why they actually had a C minus. Because Texas Roadhouse usually is one of those companies, almost quarter in and quarter out, you can usually count on having a grade A type income statement. But they didn't get it done this latest quarter. I'll show you guys what happened there. So in terms of Texas Roadhouse's latest quarterly numbers, right? The revenue growth was nice. Food and beverage was up substantially, but of course, like if your revenue is going to be up substantially on a year-over-year basis, well, shoot, your food and beverage is going to be up a lot as well, right? But where they ran into trouble is labor seemed like it was excessively high. I mean, they went from $330 million the same quarter last year to $378. That's, almost a $58 million or almost a $50 million increase in labor year over year. That's big. On top of the food and beverage being up substantially, rent was up, but you can kind of understand rent would be up a little bit. Other operating was substantially higher, $169 million versus $146, so we can call it $23 million up year over year for other operating expenses, right? Pre-opening, you understand that, opening new restaurants, depreciation, amortization, okay. General administrative also jumped for the company about, we can call it roughly $5 million year over year. So total operating costs and expenses up substantially, which means their income from operations actually fell year over year. So, from $75 million to actually $73 million income from operations. So that's why I gave them a C minus is, in no situation should you ever be increasing your revenues rapidly and your income from operations go down, especially for an established, well-run company like a Texas Roadhouse. So it was really disappointing. Income before taxes was down for the company on a year-over-year basis. And once again, that's even with revenue being up. I mean, that's revenue up, $128 million or something like that on a year-over-year basis? What is that, $128 million in revenue up year-over-year? So, to have your revenue up $100 million plus in a 3-month span versus the same quarter a year ago and your income actually drops is not good. So that's why I gave him a C minus there. But somebody say win, no, win wouldn't fit that criteria. Win, no.
Tailwind as well for the builders, and we expect them to trade up into the end of the year and into next year.
So if existing home sale inventory does start to increase, if you start to clear this market a little bit, whether because rates are friendlier or whatever, is that to the disadvantage of these home builders because they seem to be really benefiting from the lack of turnover otherwise?
Well, most trade-up buyers and new homes, they do benefit obviously from just general liquidity. So to the extent people are trying to position normalized inventory, if you will, as a bear case, we think that's inconsistent with history. And I would note existing home prices at 4%, September year over year. Actually are accelerating. I think we really need to recognize how much of a disconnect that is from the post-1982 world where we think low affordability compresses price. If you think about 05, 09, that was not in the case in this 1960s or the 1970s, I would point out.
All right. Yeah, we got to go further back, I guess, into the past to see a similar setup right now. Appreciate the time, Ken. We do have to run. Courtney, what are the retailers expecting to see in the next few days?
Yeah, Mike, obviously tomorrow begins retail's most critical 5-day stretch really of the year. And the National Retail Federation predicts more Americans will shop over this 5-day stretch than ever before, at least in its tracking. Now, the XRT nearly flat here on the session, but the iBuy ETF made up of largely e-commerce heavy retailers, that's up more than 1%, outperforming the broader market today. Adobe says that Thanksgiving to Cyber Monday stretch will make up an estimated 17% of total online holiday sales, with particularly big days on Black Friday and Cyber Monday. And Adobe says we're already up 5% November 1st to the 20th on those e-commerce numbers.
Probably some people doing early shopping.
Actually one of retail's strongest today, gaining more than 4%. And that's on top of Tuesday's 21% gain on the back of earnings. Beauty, nearly positive across the sector. Mike, this has been a standout category in retail earnings reports and expected to be a key gift this holiday season. So we're going to watch shares there. Nordstrom, Urban Outfitters, and Guess, though, all trading down pretty sharply after the bell reports Tuesday. Back over to you.
Yeah, no small moves in this group, it seems, Court. Thank you so much. Bryn, we talk about the health of the consumer, low unemployment, maybe some slowdown, but still good consumer balance sheets. And yet, retailer by retailer, it's hard to predict how it's going to play. Is this an area that you'd be looking at right now?
I think it's an area that we like to look at going into this type of year and type of shopping. I think if I were going to invest here, the three names I would look at are Walmart, Amazon, and Shopify. Obviously, Shopify is the rails. Amazon,
Shopify? We're literally grading Shopify right now, and they talk
Walmart
about it.
Quite handily after
That's
earnings,
hilarious.
and I think that was kind of a mixed bag. They had really solid numbers.
Literally about to pop Shopify numbers on
here.
here.
At these levels.
Before we play our game, let me just show you guys Shopify. Yeah, Shopify is one of the few companies out there that has a grade A income statement and balance sheet. This is our latest income here. So subscription revenue's up substantially year over year. Merchant solutions up substantially year over year. Revenue up substantially year over year. Subscription solutions and merchant solutions, they kept those lines in pretty good areas as far as cost of revenues go. Gross profit exploded to $901 million for $662 in the same quarter last year. So that's impressive. That's almost, $239 million, something like that year over year. Very impressive. Sales and marketing was actually down for the company year over year, which is crazy impressive considering how much their revenue was up. Like, that's really special. R&D was down about $100 million year over year, which, like I said, it's a plus and a minus. You cut it too much and then you risk not having as much innovation. General administrative was down a world of difference year over year. But do keep in mind, I believe in the same quarter last year, they did have some other businesses that they sold off recently on the logistics side. So $255 million down to $137 this latest quarter. So their operating expenses only $779 when in the same quarter last year was $1 billion, over $1 billion. Which, if your gross profit was up a couple $100 million plus, and then your operating expenses was down a couple $100 million plus, that means your income from your overall income, your income from operations is going to be up substantially, right? And if we look at income before income taxes, $700 million in the plus versus $158 million loss last year. Net income, $718 million versus $159 loss last year. And obviously their EPS went to the moon. So, what a change a year makes in Shopify. And this is why I said, it's going to be huge them getting back to a business model that is a asset-light strategy. That's where Shopify really excels. Look at this balance sheet. I mean, it's incredible. Cash equivalents over $1.2 billion. Marketable securities over $3.6 billion. If we look at current assets versus current liabilities, $6.1 billion current assets. $852 million in current liabilities. You got to be flipping my flapjacks. Holy smokers, that's no dang jokers. It's incredible. Absolutely incredible. If we look at total assets versus total liabilities, $10.4 billion. $10.4 billion in total assets versus total liabilities, $1.3 billion. Shareholder equity over $8.2 billion. I mean, it's just phenomenal. Alrighty.
Slowing down a little bit means it's not just the lower end of the market that's really struggling. What I look for then is, yes, let's look for value. I've always loved Costco in this sector because I think it's a strong value for shoppers there. Walmart is one we still like, and we like with the dip buying.
I like this lady.
And then getting away from kind of some of the more high price. Ross came in and they did quite well. And
she knows what she's doing. I like her.
So looking for value in the marketplace for shoppers, like you said, maybe looking for a little bit more discounting. I do have to warn, we don't have the inventory problem we had coming into last.
Somebody said I could buy a turkey with my gains today. I don't know. Can you even get a turkey for that much nowadays?
I think you're going to see some of those discounts we had when that inventory backlog was a huge problem for retailers earlier this year.
Okay, Victoria and Matthew, thank you for joining us, and have a happy Thanksgiving with all the major averages finishing.
Thank you.
Yeah, great.
So, a couple of subjects I want to speak about before we sign off here today. If I can, man, there's so much crap I have up here right now. So Shopify, grade A, grade A, grade A. Public count, boo. Public count, $383. Could barely afford Thanksgiving dinner with that dang money. Zoom is getting intriguing. Honest was ridiculous. Look at it. It didn't even hit average volume today, folks, and it was up 18%. That's wild. Honest was wild today. Honestly wild. I want to talk about that in just a moment. John Deere. Somebody asked about John Deere earnings in the chat. They reported this morning a grade C income statement. There it is. Nordstrom was a C plus as far as their earnings go. We talked about Zoom. Zoom's a grade A on both. Crazy. That Honest move was honestly wild. Okay. So, by the way, somebody asked what I'm doing for Thanksgiving. Just hanging with the family. Might play some football, something like that. Maybe a little two-hand touch with the boys. We'll see. Somebody asked, why do you need a phone number? Email should suffice. Well, it depends. Some people don't even do email nowadays. So, literally, like some people, especially a lot of the new generation, like they're like, email? Like, who does email nowadays? Like, what? But yeah, that's what I'm up to for Thanksgiving. Just hanging with the family. Somebody said Instacart is undervalued. Buy now. Insta freaking cart. You need to be flipping my flapjacks. What are we talking about? Oh, hell no. Instacart. You couldn't pay me to buy that stock. You couldn't pay me to buy that stock. Instacart? Oh my gosh. No way. Yeah, this is a post I made. Oh, somebody asked about my next video on the main channel. I'll probably do one on Friday. I'm not obviously producing any videos on the main channel tomorrow. I'm not going to do one today either. I put out some, I think, really good videos over the last few days, so I'll just let those ones run over this next couple days here. But I'll likely do a big video on Friday. And if there's no big news on Friday, what I'm going to likely do is I'm going to show the entire public count, and I'm going to go through every single position in the public count and talk about them in depth and share my opinions and perspectives on those stocks. Kind of preview those stocks for 2024. Do I think those stocks are going to do well? Do I think they're going to do bad? So that'll likely be a very in-depth kind of beast video that I'm thinking about doing on Friday. And I thought that could be unless there's some sort of big news, then that would be kind of the core subject. But anyways, there's an old post I made on Instagram back on December 7th, 2018. And, it's crazy looking back at that. I talked about it a little bit, I think, on the main channel yesterday at the end of it. It was like, every once in a while you get these opportunities in the market, and that was a crazy time period back in December 2018. I don't know how many of you guys were in the market back then, but Many of the biggest tech companies in the world were just trading at insanely low valuations. And what a time. And, I was looking back, and it was like Apple stock back then was on a split adjusted basis of like 40-something dollars a share. Apple today is about $190 a share. Obviously, we know Tesla made a huge move. NVIDIA back then was less than $40 a share on a split adjusted basis. And obviously, we know NVIDIA today is like $90 a share, $480 or whatever. It was just crazy seeing some of those valuations back in that time period when the market was just going down. And, every time you get one of those opportunities, you just got to take advantage. That's who always ends up winning, is whoever's takes advantage. You're buying during that time, you got great deals on stocks. You're buying during the Rona crash, you got great deals on stocks. You're buying last year, you got great deals on stocks. This year, you're getting great deals on stocks, just different groups of stocks, right? Last year was more tech, big tech, mega caps. This year, it's more small caps, dividend stocks are presenting those opportunities. So, but yeah, you just have to be thankful when you get those sorts of opportunities and take advantage. And, like I said in the video on the main channel yesterday, the only suckers are the ones who aren't taking advantage of those deals. The doomsday people, it's just got to keep going down, blah, blah, blah. The bottom line is, you get incredible opportunities. Take advantage, man. Build your portfolios up. Own the world. Because then you look back in a few years and you're like, we're all freaking out over whatever it was at the time. It's always something different. December 2018, it was the Fed. People were worried about the Fed going up in rates. 2020 was Rona, once in a 100-year pandemic, right? This year was regional banks and the Middle East stuff. And, the year before was Russia, Ukraine, and the Fed. There's always a reason they'll give you to get you out of the market and get you scared. But ultimately, it's all buying opportunity. It's all a great opportunity to build your portfolio bigger and bigger and bigger. And own great companies that are going to produce much bigger revenues and net incomes in future years. And that's the whole name of the game. And build stronger, folks. So anyways, just thought that was a little food for thought there. I appreciate everybody joining me as always, folks. Black Friday is a big deal. This is probably the last video I produce until Friday. So if you want access to that deal, check out the reaction channel or the main channel. And you can check out the pinned comment on those videos and enter in for that. It's a one day only sale on Black Friday. So, other than that, once again, I hope everybody has a happy Thanksgiving tomorrow. Enjoy some time with your family. And anyways, happy Thanksgiving, folks. Much love as always. Thanks so much for joining me. And have a great day. Peace.